So I believe we are live. Please let me know whether my audio and video are clear to all of you. Please let me know whether my audio video is clear to all of you. Whether am I audible to you all clearly? Yes, sir, clear. So, hello everybody. Welcome to the CA Final Direct Taxes and International Taxation English Power Batch. I hope you all are doing really well. Just let me know in the comment section how you are experiencing these Power Batch. How is your experience altogether? So that we can start off with today's session. Sir, before starting anything today fresh, why not we revise all the sections that we have studied till now in PGBP? Yesterday was our day number 4. We started off with chapter PGBP, and today we have completed substantial portion of that. Sir, why not to revise section numbers along with? Okay, sir, got it. So we'll be revising with you. We'll be revising with you. So yesterday we started off with section number 28, which was the charging section. It laid down the guidelines what all incomes will be taxable under the PGBP. Yes, sir. It was the charging section. After section 28, we had section 29. What was section 29? So section 29 was how to compute PGBP. Okay, sir, we got this point. Once we understood how to compute PGBP, section 30 came into picture, which we talked about. Section 13 came into picture, which talked about rents, rates, taxes, insurance, and repairs of building. Section 31 was the rents, insurance, and repairs of machinery. Section 32 was all about depreciation. It was also about additional depreciation. It was also about unabsorbed depreciation. Section 33. What was the section 33? Section 33, there was no section as such. We had 33AB and ABA. This section was about tea, coffee, rubber business in India, or petroleum, natural gas extraction work. 20%, 40% we used to get deduction, if you remember. Sir, after 33, we had 35, which was scientific business. Okay, sir, after 35, we had section 35 AB, ABA and ABB. It talked about telecom license, telecom spectrum. After that, we had 35 AD, which talked about specified business. After 35 AD, we had 35 CCC and CCD. CCD talks about agriculture extension project. CCD talks about skill development project. Okay, sir. Then we have 35 DD, expenditure on amalgamation and demerger. We had DDA, expenditure on VRS. Section 35D was about preliminary expenditure. Then we had 36, which talked about certain deductions. We had 37, which talked about general deductions. And then we came on to 40, which talked about amount not deductible. Whenever you pay whenever you pay outside India, you have to deduct TDS. If you do not deduct TDS 100%, expenditure will be disallowed. If you pay to any resident, 30% will be disallowed. This was all we had studied till yesterday. We studied another section which was 40A5 This talked about tax on non-monetary perquisites. So if any of the if any of the employer pays any of the tax on my non-monetary perquisites, it is normally it is normally disallowed to such employer and it is exempt in my hands. We'll study about this depth in previous chapter, but this is all what we had studied yesterday. These were all the sections that we had started off and finished off yesterday only. Were you able to recollect the section number and a, a bit of content within these sections? Were you able to recollect? Are Baba, were you able to recollect these sections? And whoever is live, at least just drop your message, a good morning message, so that I know who is sitting live. Just drop a sweet good morning message. Yes, sir. Yes, sir. Absolutely. We could recollect whatever you had taught yesterday. So, continuing further, today we are starting off with section 48.2. 48.2 is a beautiful section. It says, if you make any payment to your relative, if you make any payment to your relative, excess than FME will be disallowed. Oh, if you make any payment to any of your relative and if you do it more than what its FMV is, then whatever excess you are paying shall be disallowed. For example, if I am supposed to buy certain things at rupees 1000 and by default I am intentionally paying 10,000 rupees, provision says 9,000 will be disallowed. Whatever intentionally, unintentionally, so if I am paying anything extra, that shall be disallowed. Oh my god. Oh my GAWT god. So we got your point. We got your point. So who is your relative for the purpose of section 48.2? Sir, you have to remember this relative. If you remember, we had studied relative under 56.210 under IFOS topic. We had already studied a relative whereby I asked you to remember this mouse, this individual, spouse, lineal descendants, individual brother, sister, spouse's brother, sister, individual brother, sister, and their spouse, spouse's brother and sister, and their spouses, mother, father, mother, father, lineal ascendant, mother, father's brother, sister, and their respective spouses. So these all are the relatives referred under section 56.210. Whenever we will be referring, whenever we will be referring relative under 56.210, we will be referring to these all relatives. But sir, whenever section talks about 48.2, then we have to see different relative altogether, which constitute, sir, spouse, mother, father, brother, sister, LALD. Whenever we talk about relative referred under section 48.2, whenever we talk about relative referred under section 48.2, it is always, sir, mother, father, brother, sister, LALD, and spouse. Mother, father, brother, sister, LALD, and spouse. Mother, father, brother, sister, LALD, and spouse. Sir, what is LA and LD? Sir, LA implies lineal ascendant. It implies any of the person who is in your top-notch hierarchy. For example, your grandfather, your grandmother, your mother's grandfather, your mother's father, your mother's mother. That is the lineal ascendant. Your son, your grandson, your daughter, your granddaughter is your linear descendant. So we got this point. Sir, for an individual, his spouse, his mother, father, brothers, his LALD are a relative. For an HUF, sir, for an HUF, all the members of the HUF are relative, member 1, member 2. And every member's mother, father, brother, sister, LA, LD plus spouse is relative. Similarly, for member 2 also, his mother, his father, his LA, LD, brother, sister and spouse will be relative for HUF. And for third member also, mother, father, brother, sister. So we have to understand, whenever we understand the relative under section 48.2, we have to refer these six members. So spouse, mother, father, brother, sister, LA, LD. For HUF, their members and their relatives. For firm, for example, firm has partner 1, partner 2, partner 3. So all these three partners are relative to HUF, but also their relatives, their partners' relatives shall also become relative of the HUF, relative of the firm. Sir, if you have a company, then provision says whatever the directors are, sir, for example, director 1, director 2, whatever the directors are, these are directly related. But sir, if we have any other relative of the director, he shall also become relative. Director's mother, director's brother, director's father, director's sister shall also become relative. So we have AOP, whatever the relative AOP has, whatever the member have AOP that are directly related, whatever the members AOP has, sir, those are directly related, and sir, members relative shall also become related for AOP. Also, sir, last point says if a person holds substantial interest, if a person holds substantial interest in the business of the assessee or in the business of the relative of the assessee, he shall become relative. If somebody is holding substantial interest in my business, or if somebody is holding substantial interest in relative of my business, a business of my relative, provision says he will become my relative. Sir, it's simple. Sir, what does substantial interest imply? Sir, 20% or more shareholding or 20% or more profit sharing. This is why the reason why parent and subsidiary become related. Sir, no such issue as such. Is it clear? Yes, sir, absolutely clear. Yes, sir. If it is clear, then I have a question to make. I have a question to make. I want all of you to answer this. Sir, for example, we have Miss Monisha. Miss Monisha. This is Miss Monisha's P&L. Sir, you have to answer this question. It is a beautiful question. You have to answer it. Miss Monisha purchased goods from father, 10,000. 1 lakh actually. FMV of such goods, oh, just 50,000. Hmm. Paid interest to her brother, 20,000. FMV of such interest is 10,000. Oh, sold goods to mother, 60,000. FMV. So FMV was 1 lakh 20,000 rupees, but she is just selling at 60,000. She is selling at a loss. Oh, received interest from sister. While doing purchases, she is intentionally paying higher sum. While doing sales, she is intentionally charging lesser sum. What do I do in this case, Baba? What do I do in this case? Sir, what will be the amount disallowed by the AO under section 48? What will be the amount disallowed under section 48? So this is my question. I expect everybody to answer. I expect everybody to answer. Hmm. This is not the way you think. Mhm. This is not simple question. Sir, let me tell you. Arjun says 60K. Hmm. Okay. Mm-hmm. Okay. Sir, the most important thing while referring to section 48 is, sir, we only have to look the payment portion. Never ever, never ever we have to look for sir receipt portion. Sir, it is irrelevant. Whenever we are charging anything lesser, it is not relevant for 48. 48 explicitly says if payment of expenditure made to relative, then AO can disallow the excessive to reasonable amount. Sir, whatever payment that you are making to relatives, sir, it is only relevant to payment portion. So excessive payment here is 50K. Excessive payment is 10K here. All in all, sir, 60K payment. is being made. Therefore, only 60K will be allowed. 60K will be disallowed. Sir, as Arjun said, as Monisha said, it is absolutely correct. Sir, cash payment. Sir, what this section implies? Sir, what this section implies? If any expenditure is done by the SSC in a single person, sorry, in a single day to single person, then such expenditure, if it exceeds 10,000 rupees, should be done via account paycheck, account pay demand draft, electronic clearing system. If expenditure is greater than 10,000 rupees and you have to pay it to single person for single transaction, so you have to pay it via account paycheck, account pay demand draft, electronic clearing system. Sir, if you pay it in cash, if you pay it in cross check, if you pay it through bearer check, provision says 100% of such expenditure will be disallowed. 100% of such expenditure will be disallowed. Clear cut disallowance at first. So, for example, we have Monisha with us. She did something very logical. She did something very logical. What she did, you know? She had incurred expenditure in last year. For example, she had incurred in expenditure like salary, account debit to salary is payable. This was the entry she done. 20 lakh. Oh. She had booked the salary in previous year 23, 24. And in current year, she paid such salary payables to cash. Oh. This is the logic that Monisha did. What Monisha did, Monisha made. She incurred salary expenditure in previous year, but she is now paying in cash. See, there is no transaction pertaining to P&L. We shall not disallow. We shall not be disallowing any sense. But provision says, as per section 40A3A, if we have incurred any expenditure in previous year, we had taken deduction on accrual basis. Now, if we are paying such expenditure in cash, then whatever cash component we are paying, that shall be added to your income under section 40A3A. So we got this point. So simply it implies that if we are paying in cash exceeding 10,000 rupees, it shall be disallowed. Also, if we had incurred any expenditure in prior years, and if now we are paying such expenditure in cash, that shall also become part of our income. Okay, so we got this point. Sir, whenever we are making payment, we are making payment to a transporter, this limit shall become 35,000 rupees. Only for the purpose of section 40A3, it shall become 35,000, not for anything else, it shall become 35,000. Okay, so we got this point. There are certain cases where these provisions of 10,000 are not applicable, where we can pay exceeding 10,000 rupees via cash. Sir, there are certain conditions. What are those? What are those situations? First of all is, see, sir, if you are making payment via account pay check, account pay demand draft, electronic clearing system, if you are already making payment via that, so then 10,000 limit is not applicable for you. If you are making any payment to bank, if you are making any payment to LIC, RBI or government, if you are making payment to bank, LIC, RBI and government, bank, LIC, RBI and government. So we got this point. If payment is made via book entry, sir, for example, I had certain receivables from Monisha and I had certain payables to Arjun. If I had certain receivables from Monisha and payables to Arjun, and I directly offset them. Instead of receiving from Monisha and instead of paying to Arjun, I directly gave to Arjun. I directly instructed Monisha to pay directly to Arjun. Provision says in such case, if you are offsetting this transaction via book entry, any payment that they do is not relevant for me. Any payment that they do is not relevant for me. For me, 10,000 limit will not apply. Okay, sir, we got this point. Sir, if we are making any payment in a village where there is no banking facility, in that case also 10,000 limit would not apply. Sir, if we are paying retirement benefit, very important point, this is normally tested in exam. If you are paying any kind of retirement benefit, if you are paying any retirement benefit to employees or is their family members, but it is up to 50,000 rupees, then it can be paid in cash. What I am saying is, listen, if I am paying any retirement benefit of for employees or their family members and 50,000 up to 50,000 we can pay in cash, otherwise sir, it shall become disallowed. Whatever the retirement benefit that we are paying, 50,000 up to 50,000 I can pay in cash. Beyond that, it shall be disallowed if I pay in cash. Okay, so if we are purchasing any sum, so if we are purchasing any goods from the producer of forest products, If somebody is processing the forest products, we are purchasing that. If somebody is processing the if somebody is the producer of products, sir, from if we are purchasing from him, then we can pay in cash. If we are purchasing poultry products, payment in cash is allowed. If we are purchasing any fish products, payment in cash is allowed. If we are making payment for livestock, sir, to the producer of such livestock, then in that case, payment in cash is allowed. So these are the just basic things. Sir, for example, whenever we go and buy the foreign exchange, we buy foreign exchange with an authorized dealer. Now, such authorized dealer has to incur transactions in cash now. He must be taking cash from us, paying dollar to us. He must be exchanging it with somewhere. So there is lots and lots of cash involved now. Provision says if such authorized dealer exchanges cash in his ordinary course of business, then in that case, any payment will not be disallowed under this section. Very important point, sir. Payment of salary to an employee who is posted to other place or shift for 15 days or more than his normal place of duty. Sir, for example, if somebody is the employee at any organization and he has been posted to any other place for more than 15 days, or he has been posted to a ship for more than 50 days, in that case, payment in cash is also allowed. If you are making payment to a cottage industry who processes or manufactures goods without aid of power. If you are making payment to any of the cottage industry who manufactures good without aid of power, sir, for example, so many of the in the cottage industries make cotton balls that are used to light the diyas, or many of the industries make incense stick that are also without aid of power. Many of the industries make chow-mins vagera, noodles they make. So these are without the aid of power. If you are paying any sum to them, it shall be allowed, even if you pay in cash. Also, last point is, sir, if I am an agent, see, if I'm directly buying goods exceeding 10,000 in cash, that expenditure shall be disallowed. But if I'm agent and I'm just buying goods on behalf of my principal, so that expenditure will not be disallowed to me. It will be disallowed to my principal. For an agent, such expenditure will not be allowed to me. If agent is making any payment in cash, sir, it shall not be disallowed to him. It shall not be disallowed to him. It shall only be disallowed to the principal. Agent is the one who is just transacting in between. He is just the middleman between principal and the seller. Sir, in this case for agent, it shall never be disallowed. Agent can make the payment. So next point is gratuity 40A7. This says that whenever we debit any expenditure for gratuity, that shall always be disallowed. Any provision for gratuity is always disallowed. Sir, I had already told in income tax, normally no provisions are allowed. No provisions under income tax are allowed. Only, sir, only the things that are paid is allowed. If you are debiting any gratuity provisions, even if it is based on actuarial valuation, we have to disregard it. Any kind of expenditure for provisions is only allowed on payment basis. It is never allowed on accrual basis. Similarly, likewise, gratuity provision is always disallowed. Whatever actual payment for gratuity is being made is always allowed. Okay, sir, we got this point. Any doubt till here? Any doubt till here? Just let me know in the comment section so that we can continue further or we can discuss it further. Morning is incomplete without tea. Continue. Shall we move ahead? Shall we move ahead? Yes, sir. Clear. Okay. Deductions claimed earlier. Deductions claimed earlier. Hmm. Deemed PGBP. Hmm. Hmm. Let us understand this with an example. For example, I purchased goods. Sir, how do I purchase goods? Arey, I just pay money and purchase goods. No, Arey, no, no, no. I am purchasing goods on credit. For example, I bought goods from Arjun. Purchases to Arjun. 10 lakh. Arjun is my trade creditor, and this will go to liabilities in P&L. Purchases is my expenditure. This will go to debit of P&L. Yes, sir. This is so the case. Yes, sir. It is the case. I bought goods of rupees 10 lakh from Arjun. I had a good intention to pay the money back. I had a good intention to pay the money back. Whenever I went to Arjun, Arjun, please take this money. He did not. He refused to take money. I'm requesting Arjun, Arjun, take the money. He's not taking money. One day, news came out that he has fled to Tanzania. Or sorry, he fled to North Korea. He is very much inspired by Kim Jong. He just fled to North Korea for staying rest of his life there. Sir, bottom line is wherever he fled, it is balle balle for me. It is balle balle for me. Why, sir? Why? Because I don't have to pay this now. I don't have to pay this. Provision says I had already taken deduction of a liability which I am not required to pay, so I have to reverse it. Provision says it shall become your deemed PGBP. How it shall become deemed PGBP? Deemed PGBP. You have to reverse this entry, Arjun, to deemed PGBP. You have to income offer. You have to offer income in this liability. So what this provision is all about now, sir? If we have any kind of trade liability, either on which deduction is taken or either on which deduction is not taken. Sir, if we have any kind of trade liability which I'm not required to pay right now, shouldn't that be taxable? Sir, for example, Monisha gave me loan of rupees 3 lakh rupees. Monisha gave me a loan of rupees 3 lakh rupees. Now I surrendered. I'll not pay. I'll not pay. I'll not pay such loan. I'll not repay such loan. Provision says, isn't that a kind of benefit that I've got? If I have got a loan which I'm not required to repay, so isn't it a kind of income for me? Right answer is yes. So, sir, such things become deemed PGB. If you have any kind of trading liability which either ceases to exist or which is not payable, which is either remitted, which is either refunded, so in such case, it is called deemed PGBP. It is called deemed PGBP. We have a trading liability which ceases to exist, which is either remitted, which is either refunded, which is either not required to be paid. It's called deemed PGBP. So we got this point. So we got this point. Sir, a classic question comes in your exam. A classic example. Sir, for example, I had collected GST from the customer. I have collected GST from the customer and paid it to government. 7 lakh. A case was filed against government and government had to refund 2.5 lakh rupees worth of GST. Government had to refund. In turn, I had passed this refund to the customer up to the extent of 2 lakh rupees. 50,000 rupees of refunded GST has not been remitted to customer. Provision says this shall become your deemed PGBP. If I have got a refund of any of the GST amount, I am required to refund it to the customers. If I did not refund such amount, such indifference shall become my deemed PGBP. This is normally being asked in your exam. You might say an adjustment from this topic. If you just see this, it will be from this topic only. It will be from this example only, that there is a high court case pending because of which we got refund of GST for rupees 7 lakh rupees. Out of this 7 lakh, we repaid this 5 lakh rupees. 2 lakh are kept idle at our current liabilities. What to do? It shall become deemed PGBP. It shall become deemed PGBP. This is what it asks. Okay, sir, we got this point. Provision says in case of waiver of loan. See, whenever a loan is being waived, sir, if a loan is being waived by the government, then it shall be always included in income. It is always included in our income. So we get. Whenever a loan has been waived off by the government, it becomes your income. Without any issue, without any doubt, it becomes the income. So we got this point. Sir, if we have any other kind of loan, if we have any other kind of loan, sir, and such loan is capital in nature. If we take any kind of capital loan, sir, capital loan actually pertains to an asset. See, ultimately, whenever we take capital nature loan, we intend to buy any asset. Yes, sir, we intend to buy any asset. Provision says if you take any capital related loan, that is added to cost of the asset now. That is added to cost of the block. So you do not need to do anything. You don't need to do anything in case it is being remitted. A capital related notes, loan, if it is being remitted, you don't have to do anything. Everything will be adjusted from block. No deemed PGBP provisions. But sir, if your working capital loan is being remitted, then you have to check. You have to check two things. Sir, whether principal portion is remitted or your interest portion is remitted. If interest portion is remitted, you don't have to do anything. But if principal portion is remitted, it shall become your deemed PGBP. If principal portion is remitted, it shall become your deemed PGBP. But sir, if interest portion is remitted, it shall we shall do nothing. So why we shall do nothing? Because for interest, it was already disallowed now. Whenever we debit interest to P&L, it becomes disallowed if we do not pay it as per 43B. Any interest debited to P&L becomes disallowed. So if such interest is not even allowed in any of the previous year, why shall we make it taxable? If interest did not give us any deduction in prior years, why will we again make it taxable if it becomes remitted? So in that case, interest for the interest portion we don't have to do anything, but for principal portion we have to make it taxable. Important point to be noted. Really important point to be noted. So we got this point. Sir, so what is the gist? Sir, whenever we have a trading liability that is either seized off or is remitted or is being refunded, it shall become deemed PGBP. Despite of the fact that whether we had claimed a deduction on that or we had not claimed deduction of that, it is not relevant. Sir, if we have any kind of waiver of loan, what it happens if government loan is being waived off, then it shall become our income. If other loan is being waived off, then it shall become income or not. It depends upon what type of loan it is. If it is a capital nature, like capital rated loan, everything is adjusted from asset. Therefore, no income will arise in our case. But sir, if any other loan pertains to working capital requirement, then in that case, if principal portion is remitted, it shall become taxable on account of remittance. But sir, if interest portion is being remitted, in that case, we shall do nothing because interest was never allowed. Now. Interest was not even allowed once. So in that case, we will not do anything. If you remember, to be honest, sir, if you remember, so there was balance charge in case of power generating units. If you remember, sir, if you remember, if in power generating units we used to sell the assets, then to the extent of cost, everything was taxable at PGBP. See, if you remember, 1,000 rupees was the cost, 900 was the WTV, and we are selling it at 950. Then whatever gain used to happen was PGBP. So that is also deemed PGBP. So if you used to sell any scientific assets, the sales price or deduction claimed earlier, whichever is lower becomes PGP. That was also section 41 to 41.3. Sir, if we had recovery of bad debt, that is also considered as deemed PGP. All three types of deemed PGP we had already discussed. But right now in this fourth portion, we had discussed about recovery against deductions claimed earlier. So we got this point. Now we have a beautiful clause 43B. Beautiful clause altogether. What this provision speaks about. There are certain expenditures in income tax. There are certain expenditures in income tax that will only be allowed on payment basis. That means you incur such expenditure, no issue. But you have to pay pay such expense up to the due date of return of income. Up to the due date of ROI, you just have to pay such expenditure. If you do not pay, we'll disallow such expenditure. If you do not pay such expenditure, we'll disallow. So what are those? So there are 7 to 8 odd categories, 7 to 8 expenditure listed in this section. You have to consider each of them individually. Sir, first of all, any tax, any duty, any cess, or any kind of interest on any kind of tax that shall be disallowed if it is not paid up to the due date of ROI. Sir, for example, what kind of taxes are covered? Sir, for example, GST. For example, property tax. For example, municipal taxes. Any taxes means any taxes. Sir, why GST? Why GST? GST is never debited to P&L. GST is never debited to P&L now. Why will that be disallowed if we do not pay? It is never even allowed. Why will that be disallowed? Can anybody answer? A general question to you all. 43B says any tax, duty, and cess shall be disallowed if it is not paid up to the date of ROI. If any of the tax is not paid up to the due date of ROI, it shall become disallowed. I am saying GST will also be disallowed if it is not paid up to the due date of ROI. Can anybody think why? Can anybody think why GST will be disallowed? Waiting for your response. It is a very beautiful point. Very beautiful point it is. I might be wrong also. GST may not be disallowed even. The what government perceives whenever we are required to pay GST, whenever we had collected GST from the customers and we are required to pay it to the government, what government assumes is if you do not pay GST to us, that means you have kept that money to yourself. If you have kept that money to yourself, then in that case, it is your income and we shall make it taxable. So, sir, even if you have not debited GST to your P&L, despite of that fact, if you do not pay that GST up to the date of ROI, such GST will be disallowed. Such GST shall become taxable if you do not pay it up to the date of ROI. So we got this point. So any kind of tax, any kind of duty, any kind of cess, any kind of interest on such taxes shall become disallowed if we do not pay them up to the due date of ROI. Second thing, sir, any kind of employer's contribution to recognized provident fund, approved superannuation fund, approved gratuity fund, or approved pension fund, or any kind of ESIC and all that shall become taxable if employer did not pay up to the due date of ROI. See, under section 43B, only employer's contribution to such fund is covered. Sir, employee's contribution to fund shall be paid up to the due date of that fund only. You cannot delay such payments. So it is only about employer's contribution that is being allowed here. Baki employee's contribution is not covered here. Sir, any kind of bonus or commission to the employee shall be only allowed if it is paid. Sir, we had already studied this in section 36. Sir, if you pay any kind of interest to public financial institution, state financial corporation, state industrial investment corporation, scheduled bank, cooperative bank. If you make any payment to such people, then in that case it shall be only allowed up to the due date of payment if it is paid up to the due date of ROI. Okay, got it. Sir, also we have a section called if we pay any sum to NBFCs, if we pay any sum to NBFCs, any interest to NBFCs, it shall only be allowed if it is paid up to the due date of ROI. If we have any kind of leave encashment, leave salaries for the employees, it shall be disallowed. It shall be only allowed if it is paid up to the due date of ROI. And any sums payable to Indian Railway for use of their railway assets. That many of the factories had to lay down their railway lines, but they use wagons of the railway. See, you must have seen a goods train where coal is being loaded, where other material are being loaded. So, sir, from where these material are being loaded, sir, these are being loaded from the factories. These factories take such wagons on lease and use it for transportation. For that matter, they have to pay certain sum to the railways. Provision says if you do not pay such sum to railways, that sum shall be disallowed if it is not paid up to the due date of ROI. Sir, all of these expenditures, sir, what are these expenditures? Any kind of taxes, any kind of bonus commission, any kind of employer's contribution, any kind of leave encashment, any kind of interest payment, or at last we have any kind of what railway asset, yes, railway asset. All these seven expenditure shall be only allowed if it is paid up to the due date of ROI. So remember, if expense pertains to previous year 24-25, and even if it is paid in next year, but up to the due date of ROI, then in that case it shall be deemed to have been paid in previous year 24-25, and it shall be allowed in previous year 24-25. But sir, but remember, if we pay it after the due date of ROI, if we pay it after the due date of ROI, it shall be only allowed. It shall be only allowed in the year in which it is actually paid. So, for example, if we pay in December 25, then in that case, it will be allowed in previous year 25-26. If we pay in next year, so for example, July 27, then it will be allowed in 27-28. In whatever year we are actually paying, that becomes relevant. In whatever year we are actually paying shall becomes relevant. Then we have eighth clause, section 43B clause 8. What it says, sir, if you have to pay, if any sum is payable to micro, small, and not medium enterprise, micro and small enterprises who have been defined as micro and small as per MSME Act 2006, we have to pay them within the time limit as is specified under section 100, as is specified under section 15 of MSME Act. What we are saying is, if we have to pay any sum to micro or small enterprises, We have to make payment up to the due date specified under Section 15 of MSME Act. And sir, what date has been prescribed? Just listen to this. This is a very important provision, and we have to practice this also. See, for example, if I and Monisha have an agreement to pay within 30 days, I have to honor this agreement. I have to honor this agreement. Sir, if I and Monisha have an agreement to pay in 40 days, we have to honor this. If I and Monisha have an agreement to pay 70 days, provision says you don't have to honor this. Maximum period by which you should make payment is 45 days. Maximum payment. If there is an agreement, honor that agreement. If there is an agreement which is very long, sir, do not honor that agreement. Honor only the 45 days. And if you do not even have agreement, then payment shall be made within 15 days. Sir, such sum, if not paid within time, shall be disallowed in the current previous year and shall be allowed in the year in which payment is made. Okay, sir, issue. No issue whatsoever. Sir, let's draw certain examples. Let's draw certain examples and try to figure out what we had studied till now. Okay. Agreement, we do not have anything. In the agreement, we don't have anything. Anything, we don't have any in agreement. Transaction date is 1st March 2025. Payment date is 31st March 2025. Sir, whether expenditure shall be allowed or disallowed in previous year 24-25. Allowed or disallowed. Second thing, agreement date is 20 days. Agreement date is 20 days. Transaction date is 1st March 2025. Payment date is 31st March 2025. Agreement is of 30 days. Transaction is 1st March 2025. Payment is made within 10th April 2024 25. Agreement is of 50 days. Transaction date is 1st March 2025. Payment date is 10th April 2025. Agreement is 50 days. Transaction is on 1st March 2025 and payment is in 17th April 2025. I want all of you to answer the first question. I want all of you to answer the first question. Just write one comma allow or disallow. I just want to see how much you know, how much you understand provisions. Just write in the first column whether it should be allowed or disallowed. Whether it should be allowed or not. See, everybody who is seeing these lectures, just respond. If you are watching live, just respond. If you are not watching live, then try to respond it yourself. Try to write down answer in your rough notebook and check whether you are correct or not. Just write one and then respond. Monisha says allow. As per Monisha, as per Chandu. Okay. Second, just answer the second one. Just answer the second one. If you are done with first one, answer the second one. If you are done with the first one, answer the second one. Monisha, second one allowed. Okay. Monisha responded as allowed in the second point. Hmm. Just answer the third one. Chandu allowed. Okay. Okay. Third expenditure. Sir, agreement is for 30 days. Transaction date is 1st March, payment date is 10th April. Will that be allowed or disallowed? What other people are doing? Waiting for a response. Waiting for a response. Answer the third one. Answer the third one. Monisha says disallowed. Okay. What other people think of the third answer? What other people? Are please reply faster. No, please reply faster. Monisha, fourth will be allowed. Okay. Fourth will be disallowed, she says. Okay, fourth disallowed. Okay. What will be the fifth answer, sir? Last answer. Last answer. Last answer. Fifth one shall be disallowed. Okay. We have answer with us. Voting lines are closed now. We just have to check for the correct answer. Sir, first of all, the first thing to be checked out is whether we have agreement or not. If we have agreement, honor that agreement. Sir, do we have agreement? Yes, sir. Can we honor this? Right answer is no, sir. If agreement is too long, take maximum 45 days, take 45 days. Okay. Transaction date is 1st March. Payment is to be made within 45 days. If payment is to be made within 45 days, then due date for payment is 14th April. Due date of payment is 14th April. So since payment is made after that, it shall be disallowed in previous year. Yes, everybody is correct. This shall be disallowed in previous year, but will be allowed in previous year 25, 26. So got this point. Second, fourth one, sir, if payment agreement is of 50 days, if agreement is of 50 days, sir, we don't have to honor that, sir. We can take only 45 days. Due date of transaction date is 1st March and due date of payment date is 10th April. Sir, is payment done within 45 days? Right answer is yes, payment is done within 45 days. In this case, sir, since payment is done within 45 days, sir, this transaction will be allowed, sir. This shall be allowed, sir. This shall be allowed. Since payment is done within 45 days, even though agreement date was 50 years, agreement was of 50 days, but we cannot honor that. We just have to take 45 days. If payment is done within 45 days, it shall be allowed. Third question. If agreement is within for 30 days, the payment is to be made within 30 days. On 1st March, we are transacting and we are making payment on 14th April. Sir, are we exceeding the limit? Right answer is yes, sir. It shall be disallowed. Absolutely correct. Absolutely correct. If agreement is of 20 days, if agreement is of 20 days, transaction date is 1st March 2025. Payment date is the 31st March. Sir, are we able to honor the date, honor the agreement? Right answer is no, we are not being able to honor that agreement. When is the due date of payment? Due date of payment is 21st March, but we are paying it on 31st March. So shouldn't this expenditure be disallowed? Right answer is yes, sir. This expenditure should be disallowed. But here is a catch. But here is a catch. So even though such expenditure should be disallowed, but that shall be allowed in the year of payment now. That shall be allowed in the year of payment. And since payment year is previous year 24-25 only, therefore such expenditure shall be allowed. So this was the catch. And in the last case, if there is no agreement between the parties, payment shall be done within 15 days. If transaction date is 1st March and payment date is 31st March, payment should have been done on 16th March. But since payment is done late, it shall be disallowed in current year, but shall be allowed in the previous year in which this payment is made. So, the payment made is also in the same year only. So in that case, it shall be allowed in previous year 24-25, as you all said it right. Beautiful attempt by everybody who tried to attempt this question. The gist of the provision is such section is to be only seen if transaction date is in different previous year and payment date is in different previous year. If transaction date and previous year payment date are in same year, then there is no point of checking because the same will be allowed always. But if transaction date is different and payment date is different, then in that case we have to check it. Example as given, whatever we had studied is the similar example we had covered here. So say if somebody like Monisha has outstanding loan, she is not able to repay the loan. She requested the lender, just convert my loan interest to new loan. See, she had outstanding loan of 10 lakh rupees and her interest accrued was 8 lakh rupees. She requested the lender, sir, reduce the loan. Lender was not agreeing. What lender did is, lender converted such interest into loan. So Monisha started claiming such conversion as deduction. Will she be allowed? Right answer is no. If you convert any kind of interest into loan, such conversion never amounts to payment under Section 43B. Sir, if you do not pay any sum, sir, it shall never be amounted as payment. It shall never be accounted as payment. Sir, conversion never amounts to payment. So this must be clearly borne in mind. This must be clearly borne in mind. Sir, Monisha was required to pay interest. Okay, Monisha was required to pay interest up to the due date of ROI to bank. Any kind of bank interest is to be paid up to the due date of ROI. Up to the due date of ROI, it is to be paid. Sir, we already know this point. Okay. Sir, Monisha was required to pay interest up to the date of ROI. Sir, Monisha did not pay. What Monisha did on 30th September, 31st October, she furnished a bank guarantee back. She gave a guarantee, she gave a bank guarantee that whenever Monisha defaults, bank can recover from this bank guarantee. That lender can recover from this bank guarantee. She just furnished the bank guarantee. Will this be amounted as actual payment? Will this be amounted as actual payment? Right answer is no, na. Right answer is no. If you are making any payment via bank guarantee, if you are just furnishing bank guarantee, that furnishing of bank guarantee never amounts to payment. It never amounts to payment. So we got this point. Okay, sir. Last point of this topic. Of this topic. I want you all to have a good attention. It is a story. It is a story of Chandu. It is a story of Chandu. It was previous year 24-25. Chandu's turnover for the year was 20 crore. Chandu's purchases and direct expenses were 10 crore. Its profit oblique PGBP turns out to be 10 crore. Chandu was crying. Chandu had tears in his eyes. Chandu had tears. He said, thank to God that we are able to earn this much. But sir, along with thanking to God, he just thought of declaring 10% of this profit as bonus to employees. He thanked his employees for working in the organization. He just wrote down a check of rupees 1 crore and gave it to labor union. So 1 crore bonus has been given by the Chandu to the employees. Sir, as soon as he gave check to this employee union, what employee union did, he just tore down the check into pieces and threw it on the face of the Chandu. Employee said, "What is this? You are earning 10 crore. Can't you give 40% bonus? We want 40%. We want 40%." They started shouting this. Chandu became sad and angry at the same time. Chandu became sad and angry at the same time. How thoughtful he was just to ask 10%, just to give 10% bonus. But sir, his employee were feeling differently. They wanted 40%. They wanted 40%. Sir, situation was bad for Chandu. Chandu was saying 10% 1 crore. Employees were saying 40% 4 crore. There was tussle going on. But who was at loss? Loss was of Chandu. Why loss was of Chandu? Because ultimately, if he did not pay any sum to the employees, any bonus, if he did not pay, he will not be allowed deduction. He wanted to pay, sir. He wanted to pay bonus to employees. But if he did not pay the bonus, he will not be allowed deduction. Under section 43B, he will not be allowed deduction if he did not pay such bonus to the employees. So what options Chandu had? Chandu created a trust. Chandu created a trust and kept this 1 crore rupees as deposit with the trust, so that whenever the dispute is settled, whenever dispute between Chandu and employees is settled, this 1 crore shall be given by the trust. This 1 crore shall be given by the trust to the employees. Now Chandu is relieved from liability. Chandu wants to pay to the employees, but instead of paying to the employees, he just gave it to the labor union. He just gave it to a trust, who will in turn distribute this money to the labor union, who will in turn distribute. Chandu had no other option because there was fight going on. They are not going to accept, but Chandu wants deduction. So what shall he do? He gave that money to the labor to a trust, who will in turn give it to labor whenever dispute is settled. My question to you all is whether payment to a trust any bonus, sir, will that be an allowed expenditure or not? If I have to pay that expenditure to the employees, and instead of paying that expenditure to the employees, I am just paying it to trust, and I am requesting trust to pay to employees whenever dispute is sorted, sir, will that expenditure be allowed? If I am paying any sum to the trust, will that expenditure be allowed? That is what my question is. Monisha says not allowed. What other people think, I want a sincere answer from everybody. And sir, please do respond. Whoever is sitting live, do respond. Will that be allowed expenditure? Provision says. Chandu says not allowed. Chandu and Monisha are on the same line. What happens is, sir, we cannot say it shall be allowed or disallowed. Merely by giving donation to the trust will not be allowed. Sir, it is the duty of the trust to remit the same up to the due date of ROI. If trust has given that sum to the employees up to the date of ROI, then it shall be allowed to us. If trust had not given this sum to the employees up to the date of ROI, it shall not be allowed to us. Sir, it is not dependent upon we whether we are giving it to trust or not. It is dependent upon trust whether it is giving to employees or not. If employees receive the such sum up to the date of ROI, then it shall be allowed to us. Otherwise, to whatever trust, whatever person we gave, it will not be allowed to us. It will never be allowed to us. Oh my God! So this is for the first time we are studying. Are you will study many things for the first time. Bonus allowed if it is paid to the trust created for avoiding the late payment, provided that such trust actually remits the bonus to the employees before the date of ROI. Sir, it shall be only allowed if trust itself remits the same to the employees up to the due date of ROI. Sir, asset acquired in foreign currency. Yesterday only we had discussed, for example, if Monisha is buying an asset for $10,000 and today rate of dollar is 80 rupees. Later on, when she went to for payment, so dollar shot up to 85. She had a loss of 550,000 rupees. What was happening to this loss? We had studied this loss would be adjusted from block. Similarly, for foreign exchange fluctuations, gain or loss, or a hedging contract, loss will be adjusted from block only. Sir, section 43 AA speaks about if we have any other foreign exchange gain or loss. If you have any other foreign exchange gain or loss like monetary or non-monetary items, if it relates to translation of foreign operations, if it relates to forward currency contract or forward currency is to foreign currency translation reserves, if any of the gain or loss pertains to these four things, it shall be transferred to P&L. Rest all conversions, rest all gain or losses on account of conversion we shall ignore. Only these four shall be considered. Section 43 CB, what it says. Section 43 CB talks about two things. First of all is construction contract and second one is service contract. As per Income Tax Act, to record any transaction or to offer income under construction contract or service contract, we have two kinds of methods going on in the industry. First one is percentage of completion method and second one is project completion method. What these imply? Understand this. What these imply? See, there are certain construction contracts which last for very longer period, which last for very longer periods. So, for example, 4 years, 5 years, 6 years. Now, in these cases, what happens is if we recognize revenue and in the last year, there will be too much of tax liability at once, whereby we could have simply we could have paid tax liabilities over the year. Whole lot of tax liability will arise in the last year because construction take place 5 to 6 years. Revenue starts coming from the seventh year, 8th year end. So in that case, it would be unjust not to charge revenue in the last year only or charge taxes in the last year. Provision says in such cases we follow percentage of completion method. Whatever the percentage work has been done, we have to allocate the actual expenditure, we have to allocate the revenue, possible revenue, then we have to take out the profit and pay taxes. This is called percentage of completion method. This is being followed in case of construction industry. So but for service contract we have a choice. If service contract lasts for more than 90 days, then in that case we have to follow percentage of completion method. But sir, if service contract lasts for less than 90 days, then we can follow project completion method. Sir, example. For example, Sarthak sir asked me to teach a batch. Sarthak sir asked me to teach a batch. Sir, for example, CA final DT Safal batch. He wants me to teach. He asked me how many hours I am going to take. I said, sir, 145 hours I will be taking. 140 to 145 hours I will be taking in Safal batch. English Safal batch. He asked me how many hours I'll be taking. I said 140 hours, 145 hours. Okay, sir. This was the case. How long you are going to carry? I had given sir two options. Either take 5 hour class daily, I'll complete it within 30 days, or either take 1 hour class daily and complete it within 150 days. Just think of it. So in this case, for example, if I start a batch on 1st Jan 2025, I completed this batch on 31st May 2025. Then in that case, previous year 24-25's revenue will be. So since as on 31st March, I had completed 60% of my syllabus, so I have to recognize 60% of the revenue of all students. This will be considered as percentage of completion method. As on 31st March, whatever the percentage of work has been done, allocate revenue and cost to such expense up to such percentage. If for service contract, if contract lasts for longer than 90 days, then in that case you have to follow percentage of completion method. But sir, in case I had asked Sarthak sir, I just want to teach the batch in just 30 days. I'll just take 5 hours a day and in 30 days I'll complete the Safal batch. Provision says in this case, if the batch starts on sir 15th March and ends on 15th April, provision says we will not follow percentage of completion method. We will simply follow project completion method. In whatever date, on whatever year project is completed, we shall take that year and date, and on that date we will charge the entire revenue. Whenever the project is completed, and we charge entire revenue on that day on which it is completed. Are you all clear? Are you all clear with the fact that what is percentage completion method and what is project completion method? What is percentage completion method and project completion method? Sir, we got this one. Sir, for example, Chandu is a real estate developer. I asked Chandu to develop my house. In return, he asked for 50 lakh rupees. Chandu is a real estate developer, and I asked Chandu just to construct my house. I asked Chandu to construct my house. In return, he asked for 3 lakh or 50 lakh rupees. As soon as has completed the house, I have just paid 40 lakh. I have just kept 10 lakh rupees with myself as retention money. I will be paying this 10 lakh to Chandu after staying for at least 1 month, at least for staying 6 months, just to check whether leakage is being, whether roofing has been done properly or not, whether there are any cracks in the walls. I just need to stay, analyze, and then I will be paying the 10 lakh rupees remaining amount. Sir, I have kept the retention money with myself. My question to you all is, sir, Chandu did a sales of rupees 50 lakh. He has only received 40 lakh because 10 lakh has been held by me as retention money. Sir, what will be his total revenue from the contract? Contract price is 50 lakh rupees. He has just received 40 lakh rupees and 10 lakh has been held as retention money by me. What will be the revenue for Chandu? Right answer is the revenue for Chandu will be complete 50 lakh rupees. Whatever retention money that client had kept with themselves, it is also considered as a part of revenue only. Sir, there was a case, I'm telling you now. Beautiful Monisha, beautiful Monisha. What happened is, sir, we have a Chandu. Chandu, what he does, very bad person. Chandu took a project of completing my house. Chandu took a project of completing my house. He asked for 50 lakh rupees project. Total project value is 50 lakh rupees on 1st April 2024. He took 10 lakh and did the work of only 2 lakh. He kept 8 lakh at FD. Oh. Brajesh, good morning, Brajesh. Answer this question, Brajesh. I'll be waiting for you also. Let's see. On 1st April, Chandu took 10 lakh rupees. He used only 2 lakh, and out of that 8 lakh, he made an FD. Again, he asked me for 10 lakh rupees on 1st 5 2024. Again, he used 3 lakh rupees and he made FD of 7 lakh rupees. He's doing literally he's doing the pilferage work, the petty cash theft. He's doing petty theft. What at the end of the day turns out to be, he had earned the contract revenue of 10 lakh rupees. He had incurred contract cost of 30 lakh rupees. He had also earned interest income of rupees 2 lakh. During the year, he had earned the interest income of 2 lakh also. My question to all of you is whether this interest income shall be charged to PGBP, whether such interest income shall be reduced from cost of acquisition, cost of asset, or such interest income shall be treated as income from other sources. Whatever the incidental revenue is, what will be the treatment of such incidental revenue? Monisha says PGBP. Chandu says PGBP. Sir, first of all, it shall never be reduced from cost of acquisition. The first thing is it shall never be reduced from cost of acquisition. Contract cost shall not be reduced by incidental income in the nature of interest and dividend. First of all, everybody is clear with the fact that shall not be reduced from cost of acquisition. That was the bottom line of this provision. Ideally, it should not be VGP, it should be IFS because it is always from the idle funds. Was this FD mandatory for business to be done? Was this FD mandatory? Right answer is no. This FD was made out of idle funds. Chandu was not in a need of such funds, therefore he made FD of such funds. So provision says in this case, it shall not be treated as, it shall not be treated as PGP, rather it shall be treated as IFOS. This was all about 43 CB, 43 CB. Continuing further, we have 43D. What 43D says? Any doubt till now? Yes, sir, clear. Oh my God, Monisha, you are winning my heart. You are just writing clear yourself. Oh, wait. Thank you so much, Monisha. 43D, what it says? Sir, it talks about interest on NPAs. See, we already are aware of this fact that whenever any of the asset, any of the loan or advance given by the bank becomes NPA, interest on such NPAs will be offered only in case it is received. It shall never be offered on accrual basis. Rather, it is only booked in case it is being received. Interest on non-performing assets shall be only booked when they are received. But the Income Tax Act says a thing which is higher, which is beyond this provision. Income Tax Act says, received we shall take, or whenever assessee himself offers such income, we shall take that also, whichever is earlier. Provision says if we have any kind of bad or doubtful debt from, in case of scheduled bank PFI, interest on an NPA shall be taxable in the previous year in which either it is credited to P&L or it is actually received, whichever is earlier. You just take the date of the receipt, or you can take whenever we do the book entry, whichever is earlier we shall be taking at for considering the taxability of interest on NPA. Okay, sir, simple provision it is, need not to stretch such point. I want you all to hold this point for some time. Question number 44 double F. Sorry, section number 44 double F, what it says. Section 44 double A is not much relevant for your examination point of view because this is somewhere we had studied inter and that too not with too much of religiousness. So this is comparatively less important. I'm personally not feeling well today, so I think we might not have a very long class today. I think we might not have a very long class today. So please do pardon me. Also, one thing I wanted to tell, from tomorrow onwards, our class will be on app. This is the last day on which we are having class on YouTube. From tomorrow, our class will be on app. So if you have not enrolled for this batch, do enroll it as soon as possible so that you get the serial key for the batch and so that you can start off watching lectures from tomorrow only. Otherwise, if you delay, you might end up losing some lectures, missing out some lectures. Tomorrow's lecture will be on app. Oof. Compulsory maintenance of books of accounts, what it says. See, if you are into specified professions, and who is a specified professional? Specified professional is nothing but as a lawyer, architect, chartered accountant, engineer, company secretary, any interior decorator, medical consultant, technical consultant, sir, film artist, or IT professional. Sir, these are considered as specified profession. Sir, if any of the specified professional has gross receipt exceeding 1.5 lakh rupees in previous year 24, 25, 22, 23, 22, 21, 22, and sir 23, 24. That is prior to previous year 23, 24. In all the 3 years, if their gross receipts exceed 1.5 lakh, then they had to maintain books of accounts prescribed under Rule 6F. They had to maintain books of accounts prescribed under section Rule 6F. Sir, what books are to be followed? Sir, cash book they had to maintain. Journal they have to make only if mercantile system is followed. So do note down in your book. Do note down this thing in your book that mercantile system is to be only followed. It's to be only followed if journal is only made when mercantile system is followed. Sir, we have to maintain ledger. We have to issue whatever the bills that have been issued by us. And if that bill exceeds 25 rupees, then in that case, we have to issue the carbon copy. Sir, if we have paid any bill, then whatever the bill we have paid, we require an original copy of that bill if bill exceeds 50 rupees. And in case of medical business, we need to have daily stock register and daily case register. Sir, we have to maintain it has to be maintained in case of specified profession. But sir, if receipts for any of the year is less than 1,50,000 rupees, then in that case, what to do, sir? You have to maintain such books of accounts through which AO is able to compute your total income. So if you are not a specified professional or if you are doing any kind of business, provision says in case of individual HF, if your turnover in any of the 3 preceding financial year is greater than 25 lakh, or your PGBP in any of the financial year exceeds 2.5 lakh. Either your turnover exceeds, either your PGBP exceeds, or whatever if your exceed, whatever exceeding. Provision says you have to maintain such books of accounts through which AO can compute your total income. You have to maintain such books of accounts through that AO can compute the total income. But sir, if you are the other person, for example, you are firm, AOP, BOI company, then in that case, if your turnover exceeds 10 crore in any of the 3 years, any 3 years prior to the current previous year, or your PGB exceeds 1.2 lakh in any previous year prior to the previous year 24-25. Provision says you have to maintain such books of accounts through which you can compute your total income. In other cases, no need to maintain books of accounts. No need to maintain books of accounts. So if assessee declares income under presumptive taxation, he is not required to maintain books of accounts. So he has to maintain books of accounts within 6 years from the end of the year in which, sorry, 6 years from the end of the assessment year. So for example, previous year 24-25, it is assessment year 25-26. Assessment year completes on 31st March 2026. You have to maintain books of accounts for 6 more years than this assessment year. That means 31st March 2032 is the due date of maintenance of books of accounts, beyond which you can just burn these books out. Otherwise, you are not required to destroy them. So if you fail to maintain books of accounts, then you will be leviable to penalty at the rate 25,000. If you fail to maintain books of accounts, then you are charged penalty rupees 25,000 rupees. Section 271A, I believe it was. Clear till clear till now. Clear. Section 44AB, another important section, what it says. Sir, if you are required to get your books of accounts audited, then get them audited 1 month prior to date of ROI. If you are required to maintain, if you are required to get your books of accounts audited, then you have to get them audited 1 month prior to date of ROI. Sir, what is the due date of ROI? Normally, for an audit assessee, the due date of ROI is 31st October. You have to get your books of accounts audited, sir, up to 30th September. Or sir, if your case falls under transfer pricing, then your due date of ROI is 30th November. You have to get your books of accounts audited 1 month prior, that is up to 31st October. 1 month prior to date of ROI, you have to get your books of accounts audited. Sir, for audit, you have to go to chartered accountant. Shravani, sir, 70 hours will be on YouTube or I need to purchase. Please confirm you have to buy Shravani. This is the last lecture on YouTube. This is the last lecture on YouTube. You have to buy this batch. Again, I'm repeating, sir. If you have not enrolled for this batch, do consider enrolling for today. Do consider it enrolling today so that you will get access today itself. You can continue watching from tomorrow. This is the last lecture that is on YouTube. From tomorrow onwards, our classes will be on Fast app. You will be given access. You will be given mail. And also one important thing, sir. Whatever mail you will be receiving for lectures, whatever mail you will be receiving for content key or whatever the things that are required to be sent, you will be receiving a link of the Telegram channel. Do join that Telegram channel. Whatever the communication I want to do with all of you, that will be only done via this Telegram channel only. Because in group, if I have sent any message, it might not be visible to you. It might get just swiped away. So whatever doubts you have, whatever things you want to discuss, whatever things you want to ask related to batch, you have to ask it in the Telegram group. I had created link of that group. I had shared it with the team. Whenever you will be receiving the link of the confirmed order, you will be getting the link of that Telegram channel also. Do join that channel at first priority. Got it, sir? I got it. I'll remind this again to you. Sir, how to get books of accounts audited? Just go to chartered accountant. He'll take fees and he'll do the audit. Sir, when you are required to get your books of accounts audited, what it says. See, if you are doing any business and your turnover exceeds 1 crore, if you are doing any business and your turnover exceeds 1 crore, then you have to get your books of accounts audited. You have to get your books of accounts audited. So got this point. You have to get your books of accounts audited. So but provision says if your total receipts, if your cash receipts are up to 5% of total receipts and cash payments are up to 5% of total payments if both the conditions are being satisfied. Your cash receipts are up to 5% of total receipts, cash payments are up to 5% of the total payments. Sir, in this case, what happens? Sir, your 1 crore limit for audit, sir, changes to 10 crore. Your 1 crore limit for audit changes to 10 crore. Oh my God, sir. Oh my God. Another very important aspect, sir, whenever we consider cash receipts or we consider total receipts, sir, we take every receipt, sir, we can take sales receipt also, we take, sir, capital gain receipt also, we take interest receipt also, sir, we do not have to restrict ourselves to the business income, business receipt. So every receipt that forms part in your books of accounts shall be considered while considering the total limit. And also payment, if you are buying something for cash, so that shall also be considered. So these cash payments and cash receipts are not just restricted to business sales. You have to consider other receipts also, other payments which are not particularly for business in nature. Sir, in case of profession, if your professional gross receipts exceeds 50 lakh rupees during previous year, then you are required to get your books of accounts audited. Yes, sir. If you are any assessee who opts for 44AD and he has opted to pay 6% or 8% tax, and in later in any of the year you want to declare lower, then you have to maintain books of accounts and get your books of accounts audited. If any assessee section 40 under section referred under section 44A, that is the transporter, 44BB, that is person who is giving plant and machinery in India for rent, or 44 triple B, in case where somebody has undertaking any turnkey project. In all these three cases, sir, you are required to declare certain percentage of income. If you intend to declare lower than that, then in that case you have to get your books of accounts audited also. If somebody is opting 44 ADA, triple B, BBA, they are not required to maintain books of accounts. They are not required to get them audited. At last, if you fail to get your books of accounts audited, you will be charged penalty at the rate of 0.5% or 0.5% of the turnover or 1.5 lakh, whichever is you are charged penalty with that much amount. Any issue in this audit portion? Any issue in this audit portion? Any issue in this audit portion, sir? No issue per se. No issue per se. The audit is a portion that we normally study again when we are studying tax audit. Again, we have to study this topic. So I don't think there is an issue with the topic. Clear, sir, clear. Perfect. Starting off with presumptive taxation. Sir, presumptive taxation. What does presumptive taxation imply? Hmm. Sir, if I am any kind of a resident, individual, HUF, or partnership firm. Am I referring to LLP? No. Am I referring to AOP? No. Sir, any individual, HUF, and firm, and they are resident. Provision says if you are not doing any agency business, brokerage business, commission business, and if you are not claiming 10AA and 80IA RRB, in that case, we allow you to offer your income on presumptive basis. Sir, how they allow? Provision says whatever the turnover you have done, of that turnover, whatever the turnover is received via banking channel, take 6% of that, and whatever turnover is either not received or received in cash, take 6% of that, and that we will take as deemed PGBP. That we will take as presumptive PGBP, sir. You are not required to do any adjustment beyond that. Whatever your turnover is, just offer 8 6% of the turnover of the component which have been received up to the rate of ROI, up to the new rate of return of income, whatever the money of the turnover has been received via account paycheck, account pay demand of electronic clearing system, and whatever the money either is not received, either received in cash, shall be offered to income at the rate 8%. Sir, we got this point. Sir, who are eligible to claim 4480 provision says if anybody has turnover up to 2 crore. If anybody has turnover up to 2 crore, he is eligible for 4480. But sir, here is the catch. Here is the catch. Sir, if your turnover, if cash receipts, cash turnover, I must say, sir, cash turnover is up to 5% of the total turnover, then in that case, sir, our 2 crore limit for presumptive taxation will become 3 crore. Oh. Sir, for example, if we are doing sales of 2.5 crore and only less than 5% pertains to cash, then in that case we are allowed 4480 even up to 3 crore limit. Okay, sir, we got this point. We got this point. Sir, in Hindi, I called it chonchalebaji. A chonchalebaji imply unnecessary message, unnecessary point. Sir, what it says, if you opt for 44 AD, sir, once. If you opt for 44 AD once and declare income 6%, 8%, so you have to opt it for consecutive next 5 years also. Sir, for example, during previous year, 20 to 23, I decided to opt for presumptive taxation. So I have to opt it for next consecutive 5 years also. I have to opt for next 5 years also. If for once I thought of entering into 44 AD, I have to opt it for next 5 years also. I don't have a choice. It is being revoked. I am not eligible. That is different matter altogether. But I am required to follow 44 AD for next 5 years also. But sir, if in any case, sir, in any year, I do not offer, I do not offer income as per 44 AD. Sir, I have to maintain books of accounts in that case. I have to get them audited, and sir, for next 5 years, I will be ineligible to claim 44 AD. I will be ineligible to claim 44 ADs. So, can you think of the depth? What is this? Why it is necessary? If you are giving an option, give it for free now. Why are you giving it for if you are opting for 5 years, you have to opt for 5 years? Why it is? No excuse as such. Sir, whenever anybody is opting for 4480, just remember this point. Whatever the sum that has been received by account paycheck, account pay demand of electronic clearing system, that shall be charged, that shall be out of that sum, 6% is considered as deemed PGBP. Whatever the sum remains out to be, sir, out of that, sir, 8% is to be considered as deemed PGBP. Any person who is into agency business, brokerage business, commission business, or any person who is opting for 44A is not eligible. Any kind of individual HF, sir, firm is eligible, but remember LLP is not eligible for 4480. At last, sir, if you opt for 1 year, sir, you have to opt for next 5 years also. If you opt out for any of the year, then in that case, sir, you have to maintain books of accounts, you have to get them audited, and you cannot opt 4480 for next 5 years. Sir, simple provision it is. Yes, sir, simple provision it is. Also, sir, if your turnover is a 95% in via banking channel, then in that case, 2 crore limit will become 3 crore rupees. Provision says if you are maintaining books of accounts as per 4480, or if you are paying taxes under 4480, sir, as soon as you considered 8% as your income, as soon as you declared 8% as your income, provision says you will not be allowed any expenditure. Any expenditure that is referred under section 30 to 38 or 40, we shall not be allowed. Sir, remember, partners' remuneration, partners' interest is also not allowed. It is assumed that it is being considered while taking 8% limit. Remember, sir, whatever depreciation pertains to be for that previous year, it is assumed that its impact has been given, and block shall reduce with notional depreciation. Sir, whoever is opting for 4480 whoever is opting for 4480 then in that case he is required to pay only one installment of advance tax, that too on 31st July. Also, at last, the due date of ROI for such person is 31st July only. Similar provision for 44 ADA, what it says, sir, if you are a specified professional individual, HUF and firm, not LLP. then in that case, you can declare your books of accounts. You can declare your books of accounts as per 44 ADA. You can declare your PGP as per 44 ADA. What it says. If your gross receipts during the financial year is 50 lakh rupees, in that case, just declare 50% as your PGP. We will not doubt, we will not question what your margin is, whether you have maintained books of not. Sir, we don't care. We don't care, sir. We only want to care is if your gross receipts is up to 50 lakh rupees, just offer 50% of it. Just offer 50% of it. So do we have that do you have such chonchalebazi here that once you opt you have to opt for next 5 years also? Right answer is we do not have this chonchalebazi. But sir, we have a benefit if 95% of the turnover is received via banking channel in this case. In this case, sir, 50 lakh limit will become 75 lakh rupees for the, any of the specified professional. Similar provision apply here, so section 30 to 38 deduction are not allowed. Partnership firm, if forms for 44 ADA, then in that case, any remuneration or interest is not allowed as deduction. It is assumed that its impact has already been given. Any person opting for 44 ADA have to pay advance tax, one installment only, that too on 15 March, and at last, ROI for both of them is 31st July. 44 AE, 44 AE, what it says. If assessee is engaged in business of plying, hiring, leasing, sir, ultimately you are involved in goods transport agencies, good transport agencies. And sir, if you have any of the goods, any of the truck, any of the truck or any of the vehicle whose weight exceeds 12,000 kg, exceeds 12,000. Remember, not 12,000, exceeds 12,000. You can declare an income amounting to rupees 1,000 rupees per month, per ton, per truck, per month, per ton, per truck. 1,000 rupees you can offer. Sir, for example, if a truck has a weight of 13,200 kg and it works for 8 months, sir, how to offer? It works for 12 months. How to offer? Sir, 13,200 is considered as 14,000 kg. Just take 1,000 rupees per kg multiplied by 12 months. This is how PGBP on that truck will be considered. Sir, if any of the truck is lesser than or equal to 12,000, sir, remember if truck or any of the vehicle is up to 12,000 also, then to this 7,500 rupees per month and part of the month will apply. 7,500 rupees per month and part of the month will apply. Sir, we got this one. Part of the month imply. Sir, for example, if truck has been hired for less than 1 month, for example, it has been hired for just 4 or 5 days in a month, we have to assume that it has been hired on first day only. So in that case, we have to offer income on that day also. So we got this point. Provision says Provision says in 44 AE, you cannot have more than 10 vehicles at any point of time. So, for example, I had 10 vehicles. I just bought it today, and tomorrow I sold the old vehicle. Will I be allowed deduction? Will I be allowed this benefit? Right answer is no. I will not be allowed. Even for single day, you cannot have 11 trucks or more than 10 trucks. You are not allowed. Even for single day, you are not allowed. Also. Sir, if you are considering income as per 44 AE, deductions under section 32 or 38 have been already given. But sir, in 44 AE, you are allowed deduction of partner semination. You are allowed deduction of partner semination, but it was so not the case with 44 AD. So in 44 AD, partner semination and interest is already given impact to, but in 44 AE, you are still allowed partners interest and remuneration. If you opt for 44 AE, you don't have to maintain books of accounts. You have to pay 4 installments. Okay, sir, no issue. Sir, another important point. Another important point. Sir, whenever you want to claim 44 AE, you have to offer income from the date ready to use. You don't have to wait for asset to be put to use, sir. You don't have to offer income from put to use. Rather, you have to offer income from ready to use. Remember, this is a different point that is not given. Sir, whenever you are opting for 44 AE, you don't have to offer income. You don't have to offer income from ready to put to use date. Rather, whenever that asset is available for use, you have to start offering income from such date. Also, sir, if for example, we have turnover 90 lakh, PGBP declaring 8% of it. Current year depreciation, brought forward losses, unabsorbed depreciation. My question to all of you is PGBP before depreciation, PGBP before losses, PGBP before unabsorbed depreciation is 7 lakh 20,000. What will be the current year's total income? What will be the current year's previous year 24-25's total income? What will be the total income for previous year 24-20? My question to all of you seated here is what will be the PGBP? Sir, first of all, we are very much aware of this fact. We are very much aware of this fact, sir. Whenever we have PGBP given to us, as per presumptive income, we are not allowed deduction under section 30 to 38. So for that matter, current year depreciation will not be allowed against this because, sir, when we took 92, we took 8%, we already gave impact of this depreciation also. Sir, unabsorbed depreciation allowed or not? Right answer is no, sir. Unabsorbed depreciation is also not allowed because it falls under section 32. Unabsorbed depreciation is also under section 42, so it shall not be allowed. Sir, whether we will be allowed for brought forward losses, right answer is yes, sir. Brought forward losses are allowed to be set off against 4480. Total income will turn out to be 22 lakh, 2 lakh 20,000 rupees. 2 lakh 20,000 rupees will turn out to be total income in this case. The royalty FTS to a non-resident, what it says, if any individual pays any royalty to somebody who has permanent establishment in India, what to do? In that case, you have to maintain his P&L, consider sales, consider cost, whatever the net profit is, arrive at net profit and ask them to pay taxes. While computing the net profit, if any of the unnecessary expense of head office has been allocated to branch, then in that case, sir, we have to disallow this expenditure. Sir, if you receive any kind of grant subsidy from the government, sir, if any of the grant is received, sir, for the by the government, it is normally PGBP. If any of the grant is received on account of acquisition of an asset, then it is reduced from cost. If any of the grant or subsidy is received as corpus, it is not taxable. So this is the point. If you receive any kind of subsidy on account of LPG that is personal in nature, so it is also not taxable. Section 44A. Last section of PGBP topic. Last section of PGBP topic. Done till now? Any issue till now? Anybody? Any issue till now? Anyone? Any issue till now? No, sir. Clear, clear, clear. Continuing further with section 44A. So this in itself is a beautiful provision. This in itself is a beautiful provision. Beyond anybody can ever think. This is like that provision. Sir, what is so special about this provision? We'll understand this. We'll understand this. Sir, first of all, we need to have certain basics. I don't know what is the frequency of this question being asked, but this question holds very much importance for me at least. Because even though it has not been asked, but whenever it will be asked, it will create lots and lots of difficulties. Sir, I am in this power batch, I am assuming that you know certain things. Sir, are we aware of this fact? Are we aware of this fact that whenever we have any kind of income exempt, we pay tax zeros, we pay zero taxes on them? Right answer is yes. Sir, if we incur any kind of loss in case of exempt income, for example, we had agriculture income of 10 lakh, but agriculture expenses of 30 lakh rupees, then we have a loss of 20 lakh. So this loss cannot be set off against regular income. Any kind of loss on account of exempt income has to be ignored. Since income is not taxable, loss is not allowed. This is the basic provision. Everybody knows that provision. Yes, sir, we understand that provision. Sir, there are certain, see, in Indore, there is an association. In Indore, we have an association called Cloth Merchant Association. This association is almost, sir, 200 years old. When even Indore was not even a city, this association is that old. And by God's grace, or I should say, whatever grace, sir, they have a piece of land worth rupees 5 acre in middle of city. Ultimately, it became city right now, but they had this property since 200 years. So this property is with them. In middle of the city, they have a property of 5 acre. Sir, they have constructed swimming pool in this property. So they have swimming pool. They have basketball court. They use this land. They use this land just to let out for marriage purpose. They use this land for parties. But sir, key importance of this cloth merchant association is benefit of member. Every member pays 1,000 rupees fees per month. 1,000 rupees fees per month. Every member is required to pay, and sir, family members of these members will get these perks of basketball, swimming, cricket alley, walking, extra perks they get. What is the duty of this? What is the duty of this association? There are multiple people working together. There are multiple people coming together for a common cause. Sir, this association is receiving 1,000 rupees per month from them. This association has a ground for which can be used for letting out for marriages purpose. It has swimming pool, it has basketball court, it has cricket stadiums. Everything that a person requires is with this club. Sir, what are the income avenues of this club? Sir, what are the income avenues of this club? Sir, avenues for this club is, sir, subscription. Yes. Every month this club is receiving. What are the income avenues? Sir, income avenues are first of all is subscription. Other income avenue is, sir, letting out of premises. What other income avenue can be for this trade association? Sir, other avenues can be, sir, interest, dividend. For example, if it had surplus funds, it can invest in certain capital assets like shares. It can invest in capital assets like bonds. Sir, it can invest. Sir, it can also have capital gain income also. So these are the possible avenues now. Income from letting out the premises, income from subscription from the members, or income from the interest, dividend, capital gain. These are the, so it cannot have salary income. It cannot have salary income. Whatever the incomes possible are, I have written it down. Sir, what are the expenses for these clubs? Sir, these clubs also incur certain expenditures. What are the expenses for these clubs? Sir, for example, subscription received during the year is 10 lakh rupees. Income from letting out the premises is, for example, 50 lakh rupees. Interest dividend is 10 lakh. So expenses incurred are, see, what happens is ultimately to get them services to they are charging they are charging fees from members. They are charging fees for members and giving them services in return. Ultimately, they are charging 1,000 rupees per member as subscription fees. They are giving membership fees. They are giving swimming pool access. They are giving basketball access. They are giving a park to walk. They are giving us cricket stadium. So ultimately, they are spending too much of money. Right answer is yes. And too much of money they are spending is for members only. Yes, sir. They are spending on members only. So, sir, whatever they are spending 50 lakh rupees just for the benefit of the members. Subscription amount is 10 lakh rupees. They are spending 50 lakh rupees for the members. Um, okay. For letting out the premises, they are also having certain losses. They are also having certain expenditure. For example, 5 lakh of expenditure is incurred in case of letting out of property, and sir, actually no expenditure is incurred in earning dividend and interest. Sir, these are the income avenues, and these are expenses avenues. This is how they can earn income. This is how they can spend their income. This is the all case scenario. All case scenario. What are the possibilities? I have just jotted. I have just written them down. Sir, everything that I have taught you till now has a meaning in itself. Sir, what meaning? Sir, this term is called income from general services to members. See, this is nothing but general services now. The club is receiving subscription and it is giving services to the members. Club is receiving services and it is giving services to members. It is general income now. The main purpose of the club is this only now. The main purpose of the club is this only now. So ultimately, it is receiving the income from the members and it is distributing it to the members. It is receiving income from the members and it is using it for the benefit of the members. In this case, trade association has no vested interest. This is the general services that trade association is giving. It is receiving services from the money from the members and giving service to the members. So this income is exempt income. So because there comes up the principle of mutuality. There comes a principle of mutuality. So what it implies? So ultimately, if for example, me, Monisha, Chandu, and Brijesh, all four come up, all four contribute rupees 100, and we do a party. Sir, is it taxable for four of us as association? Right answer is no, no. If four of us just come together, if four of us just come together, contribute certain sum and do benefit for each other, sir, should this be taxable? Right answer is no, no. This is not taxable because sir, it is principle of mutuality. So that sum has been contributed for our benefit only. There is no income as such. There is no income as such. Therefore, it should not be taxable. So this is the reason why any income from the general services is not taxable. Whatever the general services trade association provides to the member, in against that it is receiving certain considerations, so it should not be taxable. Sir, is this point clear that this is general services to the members and this is exempt? And reason is very simple. If we all four together come together and contribute 100 rupees each other, 100 rupees, and just do a party of that 400 rupees, should that be taxable? Right answer is no, it should not be taxable. Is it clear? This general service income is not taxable. I hope you got the point. I hope you all got the point. Sir, clear, 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 clear. So the second thing is called income from specific services to the members. Sir, whenever a trade association is giving ground services, it is general, it is open for all. But for example, if that ground is specifically let out to me for my marriage purpose, if that ground is specifically let out to me for my anniversary purpose, if that ground is specifically let out to me, sir, I am paying specific now. So in that case, this is a kind of specific service given to me. Such specific services given to me. It is a kind of specific services that is being given to me. Sir, this is not exempt. This is considered as PGBP income of trade association. See, if a club is giving general services, charging general income, it is not. It is normal. It is normal exempt income. But sir, if trust is giving specific services, sorry, if trade association is giving specific services to the members and charging consideration in return, it is PGPP. Trade association is giving general. If it is to members, then it is PGPP. If it is given to an outsider, then it would have been a PGPP. No? If trade association is giving the services to the members, then also it is PGPP. If trade association is giving the services to an outsider, then to this would have been a PGPP. Because it is not the buy-side relationship now. This is not the buy-side relationship now. For example, if me, Monisha, Chandu, and Brijesh all four come together and work hard and at a wedding and earn 40,000 rupees, then it is income for us. No, it is income for us. If we do benefit of each other, then it is not income. But if we all four come together and work at a marriage just to get 1,000 rupees per day, so it is income for all of us now. So it is specific services given. Therefore, this should be taxable, and it is taxable under section. It is taxable under section 44A. Sir, just for instance, coming to this point, sir, we had certain things left in charging section. If you remember, I had left out certain things in charging section. Sir, this is why income derived from trade association from its member for specific services. Remember? Welcome to CA final, sir. This is why we had left this point. If a trade association gives any kind of specific services to its member, sir, for example, letting out of ground, it is taxable under PGBP. If trade association gives such property to an outsider, then it is by default PGBP. But if trade association is giving such property to the member, it is also PGBP. Sir, it is PGBP. But if trade association is giving general services, it is not PGBP, it is exempt income. Sir, we got this point. We got this point. Sir, we got this point. Not searching it out much. And sir, whatever the other income is for trade association, it is IFOS only. For association, be it capital gain, it is always IFOS. It is always considered as IFOS. Okay, sir, we got this point. Sir, I think terminologies are clear, basics are clear. Sir, how to compute total income in this case is something beautiful. Just listen for at least 2 minutes. I want attention for at least 2 minutes. Undivided attention. Sir, from subscription income, they are just having income of 10 lakh rupees and they are spending 50 lakh rupees. That means for general income, they are having losses. For letting out of services PGBP income, for PGBP income, they are having profit of 45 lakh. For IFOS income, they are having profit of 10 lakh. Sir, my question to all of you is, can I set off this loss from this PGP income or from this dividend income? Can I set off this loss? Sir, earlier I had asked you if income is exempt, losses should not be allowed. Sir, can I set off these losses? Can I set off these losses from general income with these incomes of specific services or these income of IFOs? Can I set it off? Can I set it off? Can I set it off? My question to all of you. Sir, 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 sir. Even though it is exempt income, losses can be set off. Oh my God. Oh my God. That is the best part of this provision is because while reading income tax, no, income tax never says it is a loss. It is not a loss. It is not a loss. While reading the Bare Act, you will find out that it is a deficiency. They call it a deficiency. They never use the word loss, they use a deficiency, and this deficiency can be used. This is the most peculiar thing in income tax that despite of having exempt income, losses are still allowed to be set off. Otherwise, no other provision of income tax allows such thing. This is the only thing in income tax whereby you can set off the losses even from exempt income. Because by leading the Bear Act, they do not call it even a loss, they call it deficiency. And how much loss you can set off? So you can set off 50% of the other income. So, for example, 50, 45 lakh plus 10 lakh. Other income is 55 lakh. Of this other income, sir, you can set off only 50%. That is 22.7 lakh 50,000. Sir, you can set off 27 lakh 50,000 rupees only. Of this deficiency, 40 lakh rupees, you can set off only 27 lakh 50,000. No taxes required to be paid in this. Sorry, not no tax, sir. 20 only total income will turn out to be 27 lakh 50,000. Can you carry forward this deficiency? Right answer is carry forward is also not allowed. Sir, it is deficiency, it is not lost. This deficiency, it is not lost. It is not, it is just deficiency, it is not lost. Just read out this provision with me. See, for a trade association, general services to the member is exempt. Whatever general services they are giving to members is exempt, but losses are allowed. If they give any specific service to the members, it is PGBP. Else it is IFOs. Whatever else income is IFOs. Amount received from subscription minus expenses incurred solely for the members. For example, they had received 10 lakh rupees in subscription. They had spent 50 lakh rupees. In that case, they had incurred 40 lakh rupees loss. Provision says it is called deficiency. Whenever you are spending any sum on the members, sir, never ever include capex. Whatever capital expenditure you are doing for the for the benefit, do not include that in expenditure. Sir, got this point? This will give us deficiency. Now, such deficiency can be first set off against PGP income of the trade association. If there is no PGP income, then such losses can be deficiency. So maximum deficiency that can be set off is 50% of the total income before this deduction. So maximum deficiency that can be set off is 50% before this deduction. So before taking the set off of the benefit deficiency, sir, just take 50% of the total income. Maximum deficiency that is what you can set off. The maximum deficiency that is what you can set off. How did you take this provision? How was your experience understanding this provision? With that, I can proudly say that we are done with the PGBP chapter. I don't think anything is left. Just let me go through the provisions. Sir, we had done this preliminary expenses also. This provision is left. Sir, for example, if any SSC is engaged in tea, coffee, rubber business, see what happens is in tea, coffee, rubber business, 60% of the income is exempt, 75% of the income is exempt, 30% of the income is exempt. Despite of the fact that 60%, 50%, 75% income is exempt, sir, your block of assets shall block of assets shall reduce continuously with full depreciation. See what happens is, for example, if I have an income of 20 lakh rupees, out of which, sir, 12 lakh is exempt, 4 lakhs, 8 lakh is taxable. 12 lakh is exempt and 4 lakh is taxable. Provision says, sir, if 20 lakh is income, out of this 20 lakh rupees, 12 lakh is exempt. Then some depreciation would have been of that portion whose income is exempt. Some depreciation component would have been for this exempt income now. So sir, we don't have to honor this. See, whenever you have an asset, you use for agriculture purpose and you use for exempt purpose. Whenever you have any asset which is used for both agriculture purpose and it is used for both non-agriculture purpose, then in that case depreciation in respect of only non-agriculture purposes allowed. Okay, simple point. If any asset is being used for agriculture purpose and non-agriculture purpose, so depreciation only in context with non-agriculture purposes allowed. But sir, block shall be reduced by entire depreciation. Block of asset shall be reduced by entire depreciation. Sir, for example, what I am saying is, if I have a plant and machinery, so that is used in tea business. If I have a plan, opening block is 10 lakh. During the depreciation is 1.5 lakh. Now, of this tea business, our sales is 20 lakh. Direct expenses are 10 lakh. Our depreciation is 1.5 lakh. All in all, our PGBP turns out to be 8.5 lakh. Of this 8.5 lakh, 60 lakh will become exempt. Of this 8.5 lakh, 40 lakh will become taxable. This will be exempt and 40 lakh will become taxable. Now, what important consideration is, sir, I don't have to consider depreciation separately. I don't have to consider depreciation as 60%, 40%. Ultimately, when we are splitting off the PGBP directly, indirectly, our depreciation is also split. When we are when we are splitting this PGBP directly, indirectly, our depreciation is also splitted. In that case, provision says, sir, this 1.5 lakh will be wholly reduced from block of assets. Even though some portion of this asset is used for exempt purposes also, your block shall be reduced by entire depreciation. So if your block of asset has 10 lakh rupees worth of asset, then in that case entire depreciation shall be reduced, sir, irrespective of the fact that asset is allowed, that is asset is used for agriculture purpose or asset is used for business purpose. That is irrelevant. For reducing block, entire depreciation shall be used, but for considering the total income, only depreciation with respect to business income is considered. And directly indirectly, if we are taking 60-40%, that impact is already given. Impact is already given, so we don't have to do as such, we don't have to do anything as such. Basic provision it is. If you want to remember this provision, then well and good. If you don't want to remember, there is nothing different that I have told you. It is very simple point, and it is not likely to be asked even in exam, so need not to worry at all. Break. It's 9:20. Take half an hour break. If I feel well, we'll continue for long. If not, then we'll only complete this alternate tax rates and we'll end up the class. See you guys after the break. If you have any doubt, do let me know in the comment section. I'll read that and I'll respond it accordingly. So, welcome back from break. Are we all back from break? Are you all back from break? Are you all back from break? Yes, sir. We did not go anywhere. Perfect. Just before going to break, we completed the provisions of PGBP. We completed the provisions of PGBP. Continuing further, sir, it is also an extension of PGBP only. Whenever you see a question in exam, you are required to compute the total income along with tax payable. Most oftenly, you are also required to tax calculation. You are also required tax calculation as per 115 BAA, BAB, BAD, BA. You are also required to do tax calculation on based on these methods also. So for that method, it is just an extension of PGBP. We are just continuing forward and we are just continuing the PGBP provisions only. So we got this point. What this is all about. See, on very first day, I told you that we have two different types of tax rates. First of all is such special tax rates. All the incomes that are special category in nature, those are taxable at their special respective tax rates. For example, we have capital gain, we have specific tax rate for that. If we have lottery income, we have 30% fixed, whatever the rate is, whatever the income is, 30% is taxable. If we have online gaming, if we have any royalty income, we have special tax rates for special kind of incomes. And all those incomes that are not taxable at special tax rates are taxed at a general rate. On very first day, we started off with general tax rates only. On very first date, we started off with general tax rates only. Sir, what did we start with? Sir, we started off with multiple things. We started off. Seriously, we started off general tax rate of individual. Then we came on to firm, then we came on to cooperative, then we came on to company. So these were the general tax rates. Instead of that, or instead of opting general tax rates on general income, people can opt for alternate tax rates on general income. People can opt for alternate tax rates on general income. Sir, what are these alternate tax rates? So these alternate tax rates, also called new tax regime, sir, fall under 115 BAA, BAB, BAC, BAD, and BAE. Sir, what this talks about is, sir, first of all, is 115 BAA. This section talks about if you are a kind of domestic company. Any domestic company, sir, irrespective of the fact. So, any domestic company, sir, you have an option of paying 22% taxes. The way you are being charged at the rate 25%, 30% as domestic company, you have an option to pay a lower tax of 22%. Oh, wow, sir. Oh, wow. Sir, in general tax rates, you are being charged 7%, 12% surcharge. Sir, but surcharge is as per slab. But right now, in this 115 BAA, you are being charged 10% flat surcharge. Even if you earn 1 rupee, sir, your surcharge is 10%. Even if you earn rupees 100, then surcharge is 10%. Sir, flat 10% surcharge is to be added. So, sir, health and education cess remains the 4%. All in all, you are being charged 25.16% holistically. Provision says if you have any kind of special income like capital gain, like lottery, like any other income, sir, it will continue to be taxed at the rate same at the same rate the way it is being charged. Surcharge will be 10% only since surcharge 10% is for whole income. So surcharge here will be 10% on capital gain income. So what benefit that we have got is the 22% tax, 10% surcharge, 4% education cess. And on capital gain income, tax will be same, but surcharge will be 10%. So that is the benefit that we have got in 115 BAA. See, coming on to 115 BAB, so less relevant for you right now. If you are struggling with this topic, you can skip out. You can think of skipping out this topic because this is not relevant as of now. Why, sir? Why not relevant? See, 115 BAB is only applicable to those entities, to those domestic manufacturing company who had commenced their operations on or before 31st March 2024. That means just before the commencement of your previous year, if a company had already commenced this operation, then it will be eligible for 115 BAB. Otherwise, no other company as of now can claim 115 BAB. Okay, so we got this point. Sir, what is the tax rate in case of 115 BAB? Sir, we are being taxed at the rate 15% on our manufacturing income. Sir, whatever manufacturing income we have, sir, we are being taxed at the rate 15% on that. Okay. 10% surcharge, 10% surcharge is mandatory. 4% education cess is also mandatory. Sir, what if we have other incomes? What do we do if we have other incomes? See, if you have capital gain income, then it is being taxed at the respective rates. Sir, what if we have lottery income? Arey Baba, it is being taxed at the respective rates. Sir, what if we have house property income, we have IFS income? See, if you have any kind of house property income or any kind of IFS income, then you do not get benefit of 15% on such income. If you have any kind of house property income, if you have any kind of interest income, then it shall be taxed at the rate 22% as per 115 BAA. This 15% benefit is only allowed in case of manufacturing concern and only for the manufacturing income. Okay, sir, we got it. Sir, also, sir, for example, if we divert our income, for example, if we have two entities, one is paying taxes under section 115 BAB, another is paying taxes at that 30%. Now I started to divert this income from 30% tax paying entity to this 15% tax paying entity just to prevent my taxes. Sir, will this be allowed? Right answer is no, sir. No. AO will treat it domestic transaction and it will tax at 30. Sorry, if AO finds out that my income has been transferred, then he shall tax such income at the rate 30% plus 10% plus 4%. If AO finds out that I have been transferring my income from high tax paying entity to this low tax paying entity, then in that case he will charge such income at the rate 30% tax, 10% surcharge plus 4% education cess. So basic provision it is. Sir, I have a question for all of you. I have a question for all of you. Just try to answer this. Try to answer this. Sir, for example, I have been told that only manufacturing income is taxable at the rate 15%. Capital gain, special tax rates. Lottery and all, special tax rates. House property, IFOS, other business, 22%. Income transferred from high tax paying entity, 30%. Short term capital gain, question mark. Sir, what will be the tax rate for uppers for short term capital gain? See, we have studied short term capital gain is taxable at the rate slab. Not under section 111. It is not the short term capital gain referred under section 111. Sir, a regular short term capital gain, sir, how will that be taxed? How will that be taxed? I want to know, sir, what will be the tax rate? According to you, what should be the tax rate? What should be the tax rate? Sir, should it be 15%? Should it be 22%? What should be? Hmm. Sir, here is a point of thought. For short term capital gain, we have to bifurcate. If capital gain is on account of depreciable asset, like if we have plant and machinery, if we have furniture, then capital gain, short term capital gain on such will be taxed at the rate 15%. Oh. But if it is on account of non-depreciable asset, if it is on account of non-depreciable asset, then in that case, like for example, we sold gold, we sold land, sir, in that case, sir, tax rate will apply. Short-term capital gain will be taxable at the rate 22%. Oh my God. Student really face difficulty in understanding this provision. I have written it down in the book itself. Income from transfer of non-depreciable asset. Non-depreciable asset like, sir, gold is not a depreciable asset now. shall be taxed at 20%. That means depreciable asset will be taxable at that 15% only. So remember, whenever you are opting for 115 VAB, whatever plant and machinery that you acquire for your business should be new plant and machinery. Sir, imported plant and machinery shall be considered as new only. Also, sir, 20% of the total plant and machinery can be second-hand plant and machinery. It is allowed. Apart from that, sir, whenever you start a business under section 115 BAB, remember, sir, that business should not be spin off or split off or reconstruction of the existing business. So we got this point. Remember, sir, whatever building in which you are doing business, sir, that building shouldn't have been used for a hotel erstwhile. Previously, such building shouldn't have been used for an hotel, sir, or a convention center. It should have been a new building or any building which has not been used for an hotel. Sir, we will get 15% tax rate benefit on the manufacturing activities or sir research related activities or sir transportation of such manufactured product related activities. We will be getting that benefit. Otherwise, sir, we will not get any special benefit. 15% benefit is only applicable if business relates to manufacturing, business relates to research, and business relates to transportation of the products, distribution of the articles manufactured by it. So these are the conditions. Sir, what does business imply? What does manufacturing imply? See, manufacturing normally implies everything, whatever you are manufacturing, but there are certain things which are not called manufacturing. For example, if you are developing a software, if you are developing a software, if you are mining, if you are converting marble blocks into slabs, see, whenever marble blocks are being converted into slabs, see, long breaks, long rocks of marble are being broken and converted to slabs. Provision says any type of conversion of marble blocks into slabs shall not be considered as manufacturing. It is not manufacturing. Bottling of gas into cylinders. If you have natural gas and you are just bottling into cylinders, is it manufacturing? Right answer is no. It is not manufacturing. It is just packaging. So if you are printing books or production of films, if you are printing any books, sir, it is not considered as manufacturing. Nor production of films is considered as manufacturing. So if you remember, sir, while understanding additional depreciation, when we were studying additional depreciation, I had told you an important point. I had told you a point that, sir, printing and stationery is considered as manufacturing for the purpose of additional depreciation, but for the purpose of, sir, 115 BAB, printing and stationery is not considered as manufacturing. Oh my God. Also, sir, power generating business shall be treated as manufacturing only. Power generating business shall be treated as manufacturing only. Sir, if you try to violate this provision or you do any transaction exceeding 20 crore rupees with an associate enterprise, so that in that case domestic transfer pricing provision will apply. So you have to opt for this section before the first return in form 10 ID. Sir, basic provision it is. There is no such point, there is no such thing to be discussed too much. Basic provisions are these. Again I am repeating everything. Sir, first of all, 15% benefit is allowed only for manufacturing activities. Sir, for capital gain or lottery, you have to charge special tax rates. For income from house property, for other business, or sir, from interest dividends, at 22% is being charged. If income is diverted from high tax paying country to low tax paying country, sir, in that case, 30% tax will be charged. And at last, if entity has short term capital gain, then in that case, if it is depreciable asset, it will be charged to 15%. If it is non depreciable asset like gold or building, in that case, gold or land, then in that case, sir, 22% tax rate will apply on such short term capital gains. Tax as per 115 BAD, what it says. If you are a resident cooperative society, then in that case you are required to pay taxes at the 20% plus 10% plus 4%, whatever the special tax rates are for capital gain for lottery, you are being taxed at that only. Sir, simple provision, the way we studied 115 BAA is as it is, sir, for 115 BAD, a cooperative society. Similarly, the way we studied 115 BAB, we have similar section for cooperative society, as it is word to word things match. Sir, any resident cooperative society who commences its operation prior to 31st March 2024, yeah, is eligible to claim 15% tax rate on its manufacturing activities. Sir, whatever the other activities they do, for example, IFOs, other business or dividend, it is taxable at their 22%. Whatever winning, online gaming or capital gain they have, it will be taxed at their respective sections. If such entity, such cooperative is found out by diverting high tax paying content, of diverting income from high tax paying entity to low tax paying entities or provisions, AO will charge tax at the 30%. Apart from that, sir, if we have any kind of short-term capital gain on depreciable, non-depreciable assets, the way it was taxed in 115 BAB, similar it will be taxed in 115 BAE. Simpler provision. So we have certain common points. We have certain common points. Sir, certain deductions that shall never be allowed. See, ultimately, government is giving you a benefit. Government give you a benefit of lower tax rates, so provision says there are certain benefits that you will not be allowed while claiming 115 BAA, BAB, BAD, BA. You will not be allowed certain deductions. Hmm. Provision says if you are opting for 115 BAA or BAD, then you are not required to comply with MAT or AMT. Any brought forward credit will lapse. Any brought forward MAT or AMT credit will lapse. And also, sir, for 115 BAB and BAB, BAE, no MAT provisions apply, no AMT provisions will apply. So from now onwards, as soon as you fall under 115 BA, BAB, BAC, BAD, BAD, in that case, sir, no provisions of MAT and AMT will apply from there and after. Even if you have certain MAT credit, that will become lapse on exercising this option. So once you opt for these special tax rates, you have to forego certain benefits. You have to let go certain benefits. Sir, what are those? Sir, you will not be allowed additional depreciation. You will not be allowed additional depreciation. Sir, you will not be allowed 10 double A. Oh, ho. You will be not allowed 40%, 20%, that deduction that you used to get for tea coffee rubber business when you deposit certain money to NABARD. You will not be allowed, sir, deduction in case of petroleum and natural gas extraction. If you deposit certain sum to side restoration account, you will not be allowed. Oh my God. Sir, you will not be allowed Section 35 contribution to an outsider. Sir, if you remember, under Section 35, we studied 2 points. If we are into in-house research and if we are into donation to an outsider. So this section is allowed in both regimes, sir, old regime and new regime. But sir, donation to an outsider is only allowed in old. It is not allowed in new. It is not allowed in new. If you want to do any donation to an outsider, then deduction will not be allowed. Deduction will not be allowed. Section 35 AD. If you opt, if you opt for 115 BAA, BAB, BAD, BAE, in that case, you are not entitled for benefit under Section 35 AD. Oh my God. Section 35 triple C, Section 35 CCD, Section 35 triple C, Section 35 CCD. What it says? Sir, you are not eligible for any kind of deduction in case of skill development project. You are not eligible for deduction in case of agriculture extension projects. Sir, whatever the capex expenditure was allowed, you are not allowed in this case. Sir, you are not allowed chapter 6 deductions also, but there are certain deductions that you are allowed. Sir, for example, 80 double J double A or 80 LA, sir, or 80 M. So 80 double J double A is paying extra getting deduction of the new employees and their consideration. 80LA talks about IFSC unit and 80M talks about intercorporate dividend. You are being allowed deduction on these sections. Otherwise, you are not allowed deduction. Sorry, otherwise, you are not allowed any chapter 6 deduction in new tax regime. Provision says if any of the condition is being violated, then income shall become taxable at the normal tax rate. Sir, a benefit of new tax rate is only available when return is filed under Section 131. See, if we want to opt for 115 BAA, then in that year, we have to file return prior to ROI. Once due date of ROI has been lapsed, then in that case you cannot change the regime. At last, once you opted for this scheme, you cannot revoke unless the conditions and for the satisfaction of this condition is met. So, for example, I had opted for 15% tax rate. All of a sudden, what I do, I had imported plant and machinery worth rupees 50 crore rupees in old plant and machinery I had bought. Which means I had invalidated certain profit proceedings. In that case, I will just go out of old regime. Sorry, I will go out of 115 BAB. Then I have to pay taxes as per regular regime only. So you have to take care of these things also. Section 115 BAC. Just give me a minute. Just give me a minute. See, even though we are well on time, but right now I'm not feeling well. To be honest, I'm not feeling well. Um, if you all agree, we can continue from 1:15 BAC tomorrow. We can continue from 1:15 BAC tomorrow. Right now, I'm not feeling well to continue it further. We'll continue it further tomorrow. Okay, just a few things. Just a few things. Sir, this was the fifth class that we had done. Tomorrow will be sixth class. Tomorrow, our session will be on app. It will not be on YouTube. If you have enrolled for this batch, you must have got the link of the batch. You must have got the link for the CL key. You must have got the link of the Power Batch group. You have to join that group because whatever the communication I want to do to you will be done in that group only. Also, if you have not enrolled it, do think of enrolling it today. Do think of enrolling it today because if you do any late, you have a greater chance of missing out some classes. Also, we are putting our best level effort to make this batch more simple and more comprehensive. You must have seen I try to give examples, longer examples, bigger examples, just to make you comfortable with the topic. Like in PGBP, like in many other topics, I will be taking multiple examples. That is only the reason why you are able to sit here for 4 hours. Yesterday only, from 4 days, from four past sessions, I have been teaching for 4 hours, and it is difficult for me to teach. It is difficult for students to sit, but it is because of your mutual efforts where we are able to sit together. So it is for sure that you are going to enjoy this batch holistically, and at the end of the batch, you'll definitely feel confident about everything. But since if in case you have not enrolled it, even today, try enrolling it very fast because you should not miss the live session because the real essence of this batch is in live. Even if you are recording, you might be enjoying it for sure. But if you are doing it live along with me now, you have a proper discipline, you have a proper effort, you have proper initiative to complete it within time. And if you give your responsibility to me, then it is my responsibility. I'll make sure to complete it within time. Even if for that matter we have to take extra classes on Sundays, we have to take extra classes any day. In any day, if I feel like I want to take class in the evening, I will also do that. Need not to worry. It's upon me. It's my duty to get your classes completed, get you prepared for examination. It's my duty. Believe me, have faith in me. I have got your hand, I'll not leave it. So, guys, thank you so much for listening to me. Thank you so much for coming to this session. Thank you so much for trusting me. See you guys tomorrow with same energy, excitement, and enthusiasm. Bye bye. Take care and enjoy studying. Many thanks for watching.